Let me start this video by saying that if you cannot do top-down analysis correctly, there is only so much that you can do in the markets, and this is one of the problems that keeps many traders unprofitable for a long time. Now, what do I mean when I say top-down analysis? Some of you don't even know what exactly is top-down analysis. You just take your trades without looking at what exactly is top-down analysis. So for the sake of those of you who are completely oblivious of the word top-down analysis, let me take you through this simple example. Have you ever come to your chart and you want to take trade, but then you struggle with navigating different time frames? You look at the daily time frame, you look at the 4-hour time frame, you look at the 1-hour time frame, and then you look at the 15-minute time frame, and you're struggling. What time frame do I now take trade from? Yes, that is one of the troubles you go through time and again and again. Now, the reason why top-down analysis is very handy in such a situation, it is simply because price behaves in fractal. What that means is that whatever I'm seeing on the higher time frame, it is very much possible that it will happen in the lower time frame. The same thing. So the lower time frame forms a micro structure before the higher time frame forms its own macro structure. I will explain that. So I call it top and down analysis. What that simply means is that I can look at what is happening from the daily time frame and go down to the 5-minute time frame and take the trade. All right, the daily TF, that is time frame, and go down to the 5-minute time frame and take trades. And it's as simple as that, depending on the kind of trader you are, whether you're taking positional trades, you are taking intraday, you are taking swing trades, you will always fall under the top-down analysis radar. All right, so let me go through top-down analysis. For example, this is the dollar, and the dollar is about to do something very significant. That is why I'm even showing you this. So let's start from analyzing it from the weekly time frame and see what is the weekly time frame doing. We'll go to the lowest time frame possible and you will see how it works. So let's start with the weekly time frame. So the weekly time frame on the dollar is like this. Okay, look at the most recent price action. And now I did not say you should go to 2010 or go to 2011 to start looking at your chart. No. I said the most recent price action, and that's what you need. So what is the most recent price action? That is simply to say the most recent price swing. Boom. What is this? Is that a shift in market structure? Perfect. What you call change of character. It is a market structure shift on this particular price action. Price was suddenly bullish and boom, it shifted structure and it's bearish. So what do we call this price action? On the weekly time frame, we are bearish. So what do we say? The weekly time frame is bearish. That doesn't mean you should start taking trade on the bearish direction immediately. No. The fact that the weekly time frame is bearish, we would go down to the lower time frame and look at what does price have for us on the lower time frame. So this is established. Now the weekly time frame is bearish, and then we can maximize the opportunity to look at what is happening on the lower time frame. And one thing is very certain. It's either price is seeking liquidity or price is approaching an institutional reference point. Every time price is looking at a particular direction. Now look at this. By your left hand side, you have an old low here. Look at this. Are you seeing it? You have an old low here. What is resting below here is liquidity. And what you have currently is that price have traded below this low, hitting up this low, and then being rejected from this rejection block. Okay? Now, all these terms are things I've explained on my YouTube channel. Nobody needs to struggle with understanding them. You can simply go to my YouTube channel and check everything. There is explanation on institutional reference points. and it's quite easy to understand. All right. And for those of you who are like beginners, I have a YouTube channel specifically for beginners. All right. Let me show you the channel. Just go to YouTube and search for this channel, ICT Concept for Beginners. I just took time to just explain some of the basic things for you guys to understand. So you can subscribe and watch for beginners, but some of you that want to be here, you can just be here. It's more of an advanced video. All right. So this is it. Price have now cleared liquidity, hitting this rejection block. What do you expect after price have cleared liquidity? You will expect price to go back into internal range liquidity to reprice. Now this is the price swing here to here on the weekly. And what do we have? Price at discount. It's not interesting to the smart money. Smart money are not attracted here. They will come back when price comes back to the previous point when this movement started, which is the premium area. They want to do deal on the premium area. So anything down here is none of their business. So they will want to wait for price to come back into the premium and take advantage of it. So that's basically what I'm trying to bring to your attention. So if we understand that, we can now drop down to the lower time frame. From the weekly, most of the time, I will either drop down to the 4 hour. This is how I do it. If I have my weekly time frame, the next time frame is very interesting. It's either the daily or the 4 hour. I love the 4 hour more than the daily because everything I need on the daily can be seen on the 4 hour. Yes. If I have 6 4-hour candles, it will explain what happened on the daily for me. So that's mostly what I normally do. So from here, I go straight to the 4 hour. Now I have the 4 hour. This is it. All right. Now I have the 4 hour. And what do we call this area? This is the rejection block. Is the point of interest. Price have cleared liquidity. Are you seeing this clearly now? So nobody needs to get confused. What do? You look for an opportunity to go bullish because on the lower time frame, it is going to be days of retracement back into the premium area that we saw on the weekly. Days of retracement is retracement, but then it's a trend for us. It's a bullish trend for us, of course, if I'm looking at that retracement on the lower time frame. And now quickly, guys, I want to introduce you to FastBull. FastBull is an amazing platform. They have come up with their chart platform recently, which is almost similar like Trading View. But one of the things that is so captivating about FastBull is the fact that they have some unique features that are paid for on Trading View. Let me show you. They have this feature for multiple charts. All right, you can see it right here. If I click on tile window, just like you have on MT4, it's almost similar to Trading View, but this one, if you are using this on Trading View, you must pay for it. So you can have multiple assets. So for example, if I have multiple charts that I want to see at the same time, those of you who trade correlation, you can simply come to where you see tile window, boom, and you have all of them here. You can be watching the charts for correlation's sake. This is something you pay for on Trading View. Yes, I mean it. You pay for it on Trading View. And it's almost similar and it's for free. So all you need to do is to use the link in the description of this video and follow through and come over here and use fastbull.com. And then they also have an amazing platform called the chat room. You see it here. Chat room, where people from different countries, they chat, they discuss things about the markets, they discuss things about the financial markets. Maybe somebody can show you what is their trading bias for the day. You see a lot of people from their countries, they are interacting on this platform currently. To access this, all you need to do is to follow the link in the description of this video. When you come to where you see products, you see charts. This is for the trading charts, and then this is for the chat rooms. You will have all of it here. So this is it, by the way. Coming back to our analysis. So what I said is that we are now in this area. Now we need to look out for a very interesting thing here. What will come after price have traded into this? We need this because we will really be in this particular movement. So after price have done this, clearing liquidity, price quickly shifted structure here. Look at this. Boom, a shift in market structure. Does that make sense to you? You remember something ICT taught called market makers buy model and market makers sell model? If you remember this is exactly what is happening on this particular asset, where price have a key area or liquidity resting here either on the buy side or on the sell side. Let me just draw it in this manner. You have resting liquidity here, All right, you have resting liquidity. This is the 2022 ICT buy and sell model. You have price coming down all the way from the upside and price coming, boom, clearing liquidity, and then what? Shifting structure. This is the buy model for the market makers. Immediately after price have cleared liquidity, and this is exactly what is happening on this particular trade scenario. That's it. That is exactly what is happening. So price have now traded below this liquidity area. We've seen it on the weekly time frame, and even here on the 4-hour time frame, price have cleared liquidity, creating a bullish breaker block. Right. This is liquidity, creating a bullish breaker block. What do you have? The market makers buy model. The breaker block here, it should be like this. Sometimes it's mitigation blocks, sometimes it's breaker blocks, and then quickly creating a shift in market structure. This is why I said that if I'm watching this, even though the weekly time frame is bearish in its nature, I will be going bullish on this lower time frame. So everything I will be doing now that price have now shifted structure, trading into this guy. I saw this guy happened on Wednesday, this exact price action. So price have traded into the consequent encroachment of this particular fair value gap. And I was expecting price to actually respect this bearish order block. But then look at it, because it is a bullish scenario starting at that particular point. All these areas, I expect them to be violated, especially this guy. It will be violated, creating a what? Break of structure or complete market structure shift around that area. It started from here, boom. You see price coming back right into this area, right? And then it will go up. Now, for those of you who are saying, now how do we bring in the lower time frame? Because this is a higher time frame, even the 4-hour is somehow higher for some of you, we can take advantage of this. Now, price came back to this breaker block, touching it, and then it went up, boom, to that area. So if you are trading on the lower time frame, the top-down analysis helps you to know when to take the trade and how to take it. Now, you have the recent price action here. The recent price action is right here. Boom, break of structure to the upside. All right. So what you should be doing as an intraday trader, when you come and you look at what is happening here, you've seen that price have done a new price range from here, yes, to here. This is the new price range. Now that you've known that price always look for a discount area before going bullish or premium area before going bearish. Now you are in premium area on this simple price range, and this is discount. What do you have on the discount? You have what? A fair value gap, which may attract price to come back into. So if I am taking trade on this, today is Friday, I'm making this video on Friday, I will have to wait for price to retrace back into the discount area on this particular asset before I will take my trade bullish. So I will wait for it to come here before I go up. All right, so this is the 4-hour time frame perspective. But now the question is, do I wait for it to come here, or I can even take advantage of the downward movement here, down here, which is a counter trade on this perspective? So you can take trade on the lower time frame, going down into this point of interest before you finally join them, or you can just hold on, go and attend to other businesses and come back later. But those of you who want to stay close to your chart, you can go down now. Forget about the 4-hour, forget about the weekly. You have gotten what you're looking for. Do your business around 15-minute downward. Go to 15-minute time frame and then drop down to 5-minute. You can even drop down to the 1-minute time frame. All right. All this is very important for all of you. 1-minute time frame. So what you do is that you go down to the 15-minute time frame and look at what is happening. Establish a visible retracement. Establish a retracement in that area. Look at this. I am watching this and I'm saying, okay, I know that price is supposed to come here. In fact, I have inducement here. Liquidity resting below this guy, which is most likely price will come down to here and hitting this fair value gap. So I have this price swing low, swing up, swing low, and I have the last low created here. I have shifted structure perfectly. All right, perfectly. I have shifted structure. You know why this price action came in massively? There was a news on euro. Let's go to Forex Factory. So this is Forex Factory. News came in around 10 and it was CPI. So I believe the news came in massively and euro was weak. That is why the dollar went bullish for the meantime. Let's check euro USD just for example. And this is exactly what the news came in with. This was because of the news. I didn't expect this, but the news came in, but it's going to be corrected. It's going to be corrected. If price is interested in going that direction, let's go to DXY. If price is interested in going down here, I expected price after this shift in structure downward, market structure shift, because we are about to start the downward movement. This was bullish. This is it. Break of structure bullish after this one, and price created what? Move up to this area, creating a higher low. This is a higher low, higher high. All right. This was a higher high. This was a higher low. So this guy, if we close below it, and we did, I was expecting price to actually respect this guy, this bearish order blocks. Then we go bearish downward to this area. But then the news came in massively. This is some of the things you see in the markets. I saw the news coming in, but I expect price to still go lower. This is what I'm expecting, except if the news hold on to that area before price finally goes up. This is the perspective I'm looking at it from. So if I am trading today as an intraday trader, this is how I will do the trade. And I'll go down to the 5 minute and look for a nice point to take the trade. In fact, when I saw this happen, I saw the break of structure or shifting market structure on the 15-minute time frame. I expected price to actually retrace back into this area to create the price movement. But the news came in massively. Of course, it distorted every correlation or perfect setup I needed. So if you are taking trade on this from top-down analysis, I'm taking the short, but that doesn't mean I don't know what I'm doing. I knew exactly what I was doing, that price was supposed to come here before we finally go bullish, or I can walk away from the chart and expect it to finally come here, which may take from here to Monday. Monday will be another week, and that will be another movement. So let's see how it works. Because of the news, we may have some disparity here, or we may have some kind of a challenge in that, but that was how I expected price to behave. So guys, quickly, if you want to enjoy more of my top-down analysis, you can simply join the Elite Traders program. It's right here. The website is on the link of this particular video. So it's called Elite Traders program. It's for 12 months. You'll be in the community. It's not just a course, it's a program. You'll be in the community for 12 good months. All right, and then this is it. You see the Elite Traders program. You can pick it up here, add to cart and pick it. It's for $99. For those of you who want to pay with Naira, you can pay it with Naira right here. You will be in the community for 12 months. There is lifetime support. We do meet 3 times in a week. 3 times in a week, at least for 40 minutes. We meet every of our meeting days on Zoom, and you get to ask questions, and you get to chat me up also on WhatsApp, and I'll respond to you. Thank you very much, guys, for watching. I just showed you a brief explanation of what top-down analysis gives you. You look at it from different perspectives and then take your trade with understanding. The reason why I was looking at this bearish was with understanding, because I believe the smart money doesn't take trade from a premium area most of the time. They will wait for price to go to the discount, which is around this area, before they finally do the move up. Okay, so this is what I was expecting, and if price was going to come here, it means I'll have some hours of price movement down. So why wouldn't I take it if I am taking an intraday trade? So this is basically what this explains to you. Thank you very much, guys. See you in my next video. If you have any question, let me know in the comments.